wat die boere sê. Hier kom dan. Okay. So I'll use this one, shall I? Oof, no, that's so good. I'll use that one. Thanks. See, I'm messing around in your studio. Oh, shit. Is it working? Just check that. No, the SD card. Just, is it okay?
Yes.
Okay. I saw something that said it wasn't working. Ja. Hier komen dan. Okay. Hoe lyk dit daar, Stuart? Kan jy my hoor?
So these are the only three we need for today.
Sorry. Okay, let's double check. Magda, Gerry, Flash. Yeah, those are the three. Stephen. We need Stephen.
Yeah, Stephen, we did test. He says he will.
Okay, where is he?
No, he just messaged me. I told him to come in at 7:27, 7:28.
7:25.
Yeah. Okay.
Don't want to give us
17.
17. Sorry.
Doesn't want to give us heart failure. Yeah. Okay.
Right, sorry, dude. I'm just going to leave again. Join here.
Sure. Got a lot of new Twitter followers today for some reason. Gee, 46,500 now. Eh?
That's a lot.
It's a lot, eh? Okay. Yeah, it's like, I mean, isn't that cool? Look there. Yeah.
It's very cool. Yeah, Stephen. Like, my visuals are so.
Dude, you can't run away now.
I'm not.
You're not allowed to. You've got to stay.
Jeanette's light. She will kill us.
Okay.
You will scare us if you run away now.
There we
Oh, you mean Jeanette. Stephen, how's
Hello.
it?
Good, Alec. How you
Okay.
doing? Hi, Justin. Can you hear me?
Yes, and it's nice and clear. Okay, so.
How's it, Stephen? How you doing?
Good, and you?
Yeah, all good, thank you.
We've got a nice show
Justin-
tonight. Very nice show tonight.
Sorry, Alec. It looks great. I saw the lineup. Just if I want to, can I disable my mic at any stage? If I need to, if there's a bit of noise or
Yes, just mute.
so I just hit this.
That's it. Exactly.
Okay, thank you. Just in case I need to do
Okay.
that.
Dudu tends to do that quite often with Magnus, because Magnus sometimes. Okay, there's Emil.
Oh, please can you plug that?
Yeah.
Magnus sometimes breathes a little heavily while he's waiting. You know, he's waiting. He's like, it's a bit of a sigh. Hi, Emil.
Hi there. Hi, Alec. How you doing?
Yeah, man. Good to see you. Well done on your big announcement today. Another good news story. We want good news stories, you know.
Yes, we do want.
We're tired of all the bad news. Good. Lovely. All right.
How's it, Emil? How you doing?
Hi there, Justin. Good and you?
Good, thank you.
Yeah, and thank you for getting headphones and a microphone. It sounds good. Stephen, have you met Emil before?
I haven't. Hi. I haven't.
Hi there, Stephen. How you doing?
I'm well. You?
Good.
Great. So Emil's got a nice non-controversial story about Harris investing in infrastructure, the infrastructure fund, another $200 million. And then we're going to be, Stephen, I did a really nice interview with Magda about her harassment by the cops, which was quite, we forget what happened in 2016. It was a crazy time. And then we've got Jackie spoke to Gerry Fourie, and then we got Steve Brooks and Rupert Finnemore from Baldwin Properties. At the BizNews Investment Conference, Piet Viljoen said Baldwin Properties is a great value stock to be buying. And there were people there who said that they didn't agree. So it's quite a nice kind of.
That's what makes a market.
Yeah, that's what makes
If
it market.
everyone agrees, you've got a problem.
Exactly. Okay. Is Steve in already? Sure, he's early.
I do have my phone.
Okay, hang on. We got to get going, hey? It's 29 minutes past. Ready to go?
Stand by. Business Power Hour starts in 25 seconds. 15 seconds. 10 seconds.
The BizNews Power Hour.
Welcome to the BizNews Power Hour, where we give you the rational perspective on business news that matters. And if you're listening to us on live stream, go along to YouTube and watch it live. It's actually quite a great fun, isn't it, Justin? We're in the studio. We've got Dudu, who obviously handles all the sound for us, dancing to the music and keeping us in line.
Especially on this fine Tuesday evening, Alec. Got a great bunch of guests and looking forward to get back into the news.
Haven't we just? I had a terrific interview earlier with Magda Wizikcha. We've got a clip on it, on her harassment by the cops. It's actually crazy that you think about what was happening in 2016. Our guest co-host tonight, Stephen Nathan. I mean, you'd remember those times, Stephen. They were almost surreal when looking back on them.
Yeah, as you say, you know, it's such a tragedy that so much time, money, and energy was spent on completely the wrong things. There's so many opportunities and things we should be focusing on. And if you look at the wasteful resources, you know, it's not as though we're not doing anything. We're actually trying to shoot ourselves in both feet and move backwards. So it's good. It's good that that's in the past, but certainly we all want some accountability, you know, for what has happened.
You know, what is crazy is that the guy who made all the chaos, a chap called David Mclaughlin, who was then head of state security, is still a member of the cabinet. It's extraordinary, only in South Africa. Anyway, I'm sure we will have more on that story coming up. You're going to be listening to Magda. We give you the other interesting stuff today. You've been following the whole Baldwin property story. At the BizNews Investment Conference, Justin, Piet Viljoen said it was a great value stock. And wow, people there were listening to him because they shot the price up just after the conference. And tonight we're going to go into some depth on it.
Exactly, Alec. And you take what a guy like Piet Viljoen says very seriously. So I've had a look at Baldwin. It does look attractive, and I'm looking forward to chat to Steve Brooks, their CEO, about the company and the prospects of the company going forward.
Yeah, and we also have the partnership with Easy Equities, who we're going to be adding to the BizNews portfolio when we have the opportunity. That's the last Tuesday of the month where we update it. It's enough now leaving it off the charts. It must come in. Also tonight, we will have an interview that our Jackie Cameron, our editor-at-large, did with Gerrie Fourie on the results from another great company, another hot stock, if you like, Capitec. And then we're kicking off the show after our usual updates with Emile du Toit. He's the managing director of Harith General Partners. A good news story there on Africa infrastructure and a $200 million capital raise. But let's kick off with Jackie and the flash briefing.
In a victory for taxpayers and a blow for corrupt politicians, South Africa's second highest court has rejected an appeal by former President Jacob Zuma to get the state to pay his costs in a corruption case. This is the latest in a string of legal defeats for the former president. Zuma, who ruled the country for almost 9 scandal-marred years, stands accused of taking bribes from arms dealers in the 1990s. He is due to go on trial on May the 17th. The Supreme Court of Appeal, in a judgment handed down on Tuesday, said that it would not be handing Zuma a blank check to pay private lawyers. Zuma, who was ordered to pay the state's costs, was first charged with graft in 2005 when he was deputy president. At that time, he reached a deal with the state attorney whereby the government would pay private lawyers to defend him. President Cyril Ramaphosa, who succeeded Zuma, told lawmakers in 2018 that matter had cost taxpayers 15 million rand. Meanwhile, the Constitutional Court, which is the nation's highest legislative body, is separately deciding whether to jail Zuma for defying its order to testify before the Zondo Commission that is probing corruption during Zuma's tenure. Around 35% of senior managers in government do not have the necessary qualifications or credentials for their position. This was revealed by the Minister of Public Service and Administration, Senzo Mchunu, in a written response to a parliamentary question posed by the opposition Democratic Alliance. My Broadband reports that the largest number of those were in the police department, followed closely by the Department of Agriculture, Land Reform and Rural Development. The Department of Justice and Constitutional Development also has a high number of employees who do not have the necessary qualifications. Botswana's health ministry has asked the country's health regulator to probe 2 deaths of people who had recently taken a COVID-19 vaccine made by the Serum Institute of India on behalf of AstraZeneca. The regulator has been tasked with finding out if the deaths are linked to taking the vaccine, the ministry said in a statement. And US health officials have recommended a pause in the use of Johnson & Johnson's COVID-19 vaccine on similar concerns about blood clotting side effects. Bloomberg reports that a type of brain blood clot called cerebral venous sinus thrombosis was seen in combination with low levels of blood platelets in 6 women between the ages of 18 and 48. It quotes the US Centers for Disease Control and Prevention and the Food and Drug Administration. The J&J vaccine has been rolled out to about 300,000 health workers in South Africa. Capitec, South Africa's largest bank in terms of customer numbers, is resuming dividend payments after recovering from the severe COVID-19 lockdown. It reported an increase in headline earnings of 18% to just under 4 billion rand for the 6 months to the end of February. Capitec has plans to continue scaling up by expanding its reach in business banking. For more on that story, listen to the interview with Capitec CEO Gerrie Fourie on BizNews Radio, where you'll also find all our other interviews with business leaders. And that was your BizNews Flash Briefing. I'm Jackie Cameron for BizNews.
You're listening to the BizNews Power Hour, brought to you by the team at biznews.com. Well, while we were listening to Jackie, I was responding on WhatsApp to I don't know if you can call a fan, but certainly a supporter of the best football team in the world, West Ham United, who is in Berlin and is watching us directly from there. It's amazing technology, isn't it? If you haven't been on YouTube before, on the live stream on YouTube, come on, you'll see a couple of really good-looking guys, and once in a while I'll move you across and you can see the rows amongst us thorns here, who's doo-doo. Well, let's pick up on the markets first.
The JSE All Share Index was up at 67,100. MTN increased 4 Rand to 94 Rand a share on the back of news that CEO Ralph Maputa bought over 5 million Rands worth of the company's shares. Sasol increased 6.5% to 225 Rand a share on the back of stronger Brent crude prices. Naspers increased 100 Rand to a touch over 3,500 Rand a share. And Cartrack fell again, this time by 7% to 48 Rand 50. The share is now down almost 50% from its highs a few months ago. In the currency markets, the Rand was flat against all the major currencies to 14 Rand 56 cents to the dollar, 20 Rand to the sterling, and 17 Rand 36 cents to the euro. Gold is flat at $1,742 an ounce. Brent crude is up at $64 a barrel, and the premier cryptocurrency will put you back 920,000 Rand a Bitcoin.
Bitcoin's certainly been doing its thing. Another stock that's been doing well, I've been watching it on the last few days, is Transaction Capital. Now, you recall that Piet Viljoen said it was such a great deal that Transaction Capital had done with We Buy Cars, and then you investigated that on a global basis, it was really cheap.
Yes, if you had to compare it to their global peers, extremely cheap. And then we had David Hurwitz on the show not so long ago, and he explained the reasoning for that transaction. And between We Buy Cars and SA Taxi, the two components of Transaction Capital, the business is doing fantastically well.
It looks like some investment analysts have been scratching their heads, going over the numbers again, and maybe agreeing with what Piet had to say. Stephen, is that the way it works? You've been in that field, in that side, on the sell side, before you started 10X. Do you guys, clearly when information comes out, you don't or the people, I won't say you guys, the people in that field, they don't automatically say buy or sell a share. You got to crunch your numbers first.
Yes, you have to crunch your numbers. I mean, obviously, if something comes that is new, that wasn't kind of on the radar, so the We Buy Cars, I don't think people expected a Transaction Capital to have a look at that. And obviously, when Naspers had a look at it, I don't think there was much disclosed. So if there's something new, you have to certainly do your work, and you'd rather, there is always a temptation to be first, but what's much more important is to be more thorough and hopefully more thoughtful and look a little bit longer term. So it's always that trade-off between being the first person to commentate on that and try and get a bit of maybe PR publicity, but it's much more important to be right. So if people are doing the homework and they're taking a little bit longer, as Warren Buffett and Alec, long-term investors would be much more comfortable on that. But you should have a good grasp on the existing business. So something like We Buy Cars, obviously it's a new transaction, and also it's a very disruptive business. And if you kind of looking at traditional finance companies, they're much easier to value than something that is technology driven, scalable in a different way, and with a lot more upside.
There's quite a few parallels there with being in our business in media. Rather be right than be first. That's a lesson very hard learned. But talking about new things and different ideas, Emile de Tooy is the managing director, as we mentioned earlier, of Harith General Partners. And Emile, you guys have been raising capital for infrastructure investment into Africa for well over a decade now, and certainly started off doing it at a time when no one wanted to invest in infrastructure in Africa. Now you're going to pick up, or you're trying to raise another $200 million for the fund, which would suggest there's plenty of work to be done on the continent.
Good evening, Alec. Yes, thanks very much. Yeah, you're correct. I mean, we've been investing in infrastructure since 2007. And as you said, at the time, there were not many people doing that. We currently, between our first two funds, have over $1.2 billion under management. So to put it into context, this new fund that we're raising for $200 million is actually quite unique, and it's fairly small in the context of our other funds. But we've specifically also structured it to be a shorter term nature fund. So we think it makes it quite attractive for especially some of the new pension fund and institutional investors that have been looking at Regulation 28 and want to get exposure into infrastructure assets, but don't necessarily want to go into a blind pool fund for a 10 to 12 year life with very limited liquidity. So this fund, also the other reason this fund exists and why we're raising it is because we are getting towards the end of our fund 2, where we've almost fully invested, but we've got more investment opportunities than we've got funds left. So that's why we're not calling it a fund 3. It is really just what we call a sort of a shorter term nature top-up fund to our second fund. And what we'll invest in mostly is some of our existing portfolio companies' expansion. So or increasing our participation in some of our existing portfolio companies. So again, from an investor perspective, they've got a good visibility over what we will invest in, and I think that gives investors a lot more comfort.
It's always a much better thing to do a bolt-on acquisition than a brand new acquisition. Stephen, I'm sure you'll agree that looking through over many years of companies, the more successful investments by companies are in areas they already have. Think about Dimension Data, when they bought a little bit of Datacraft Asia some years ago, and then they added a bit more, and then they bought the whole company out. And then when they tried to start buying companies sight unseen, they went horribly wrong.
Yeah, without a doubt. So it comes back to your circle of competence. What are you good at? What do you have a track record in? And if there's potential to kind of scale that, to grow that, then take that opportunity. So that sounds really good. The concern is when you sort of run out of road in your core market, you kind of saturated your industry, for example, in South Africa, then all of a sudden, you think you can go and conquer the US or the UK, and that's incredibly risky, and more often than not, that fails. So I think you're exactly right. What Harith are doing, building on what they're good at, is very encouraging for investors. I'd be interested to know who your investors are, who's funding the $200 million.
Well, I think, Stephen, we're basically starting our fundraising now, and because, again, as I said, it's a fairly small fund for us. We will target all our existing investors, clearly, give them an opportunity to invest, as well as a few select or a small number of mostly South African institutional investors. We are looking to target some of the pension funds looking to get into this space. And also, I think not just with the attractiveness, also not just with regard to sort of like bolt-on opportunities, but the issue is that generally we do typically end up doing greenfield infrastructure, which means you also take construction risk, very often 2 to 3 years in some of these larger projects. And what we're doing in this fund is to invest in projects where there's very little construction risk. All that has been de-risked. We know the assets very well. We know the management teams. We've seen the track record. And we believe we've got exciting sort of entry prices into a number of these assets. I mean, to the extent that we raise the full amount, we will potentially invest in 1 or 2 greenfield assets as well. But mostly the fund will be targeted at some of our existing portfolio assets, and that's also the reason we can then see a shorter time frame.
Emil, Africa is a big place, 54 countries, and it's got some hotspots, as Total is finding out in northern Mozambique. Are you exposed to any of those areas that are very, very high risk, like the gas field that they've now hit big problems with?
Yeah, Alec, no, we're not exposed specifically to those areas. But again, I think when we look at opportunities, we not so much look at the country, but we look at how we can mitigate the risk in the specific project. So one of our latest deals we've announced was the Beitbridge border post in Zimbabwe. And so a lot of people would potentially have Zimbabwe on a no-go list. But if you actually get a transaction and you can structure and mitigate the risks properly, and we've had experience in doing that over the last 15 years, then you can actually find some of your better deals in some of the more risky countries. But I mean, we really do go belts and braces in terms of risk mitigation. And what you'll find is, for example, in the Beitbridge border post project in Zimbabwe, most of the South African banks co-invested with us on the debt side. So and those are pretty much risk-averse kind of investors if you think about it. So it's not really about where we are and whether there's hotspots or not, but we do avoid areas where we potentially see some sort of.
And it's a good news story as well. You just think about Beitbridge and how important it is that we have a good streamlined border post and getting rid of corruption, trying to make it better, work better between South Africa, Zim, and I guess further north. What are the big projects that you have on the continent?
Well, Alec, just get back to your first point. I think, on the Zim one, I think, which is very good news, is infrastructure really brings down the cost of doing business. And so when you get people and goods moving through, for example, the busiest border post in sub-Saharan Africa, it's basically good for all other companies. And investors, sort of would start to realize that investing in infrastructure then benefits all of your other asset classes as well, whether it's listed equity or government bonds, etc. But to come back to your question on other large projects, some of our landmark projects that we have is for example, the Lake Turkana wind power project, which is the largest wind power project in Africa. So from a renewable power story, we started actually developing this in 2011. I think we concluded the investment in 2014. And it's been generating and delivering up to between 10 and 15% of Kenya's power on a renewable basis. And I think what's exciting about those kind of opportunities is that, as I said, we understand the asset, we know it very well. These are kind of transactions that we develop over a very long period of time, because we've been in the market there, and so we're quite excited about that. Other interesting large assets that we're invested in that you may be aware of is CIVH. They're the owners of Dark Fiber Africa and Vumatel. So we invested there together with Remgro. You've probably picked that up through the Remgro results recently. And also Lanseria, an airport asset that I guess most of us know very well. So we obviously have a list of very interesting and very large assets across the continent. But typically, most of these listeners, I guess, know the South African assets better.
You're listening to the BizNews Power Hour, brought to you by the team at biznews.com. Isn't that interesting? Busiest border post in Africa. Byte Bridge. Wow. Let's move on to the other hot stock story. Today, Gerrie Fourie, Chief Executive of Capitec, they came out with some cracking results. Our editor-at-large, Jackie Cameron, had an opportunity to talk to Gerrie about the numbers and ask him some, well, rather interesting questions. Let's listen in.
After an early knock by COVID-19 containment measures, JSE-listed Capitec has reported a dramatic improvement in headline earnings to just under 4 billion rand for the 6 months to the end of February. Its headline earnings fell for the year by 27% overall, but the bank has joined peers FirstRand and Standard Bank in resuming dividend payments. Capitec is now South Africa's largest bank in terms of customer numbers. CEO Gerrie Fourie shares why the bank reached a tipping point towards exponential growth and what's next for Capitec as it continues to develop a strategy to scale up. Speaking to me, Jackie Cameron of BizNews, he also shared some insights on how his team is working on a strategy to eat into the market share of business banks. This exponential growth is quite extraordinary, this move from 7.3 million clients 5 years ago to 15.7 million now. What do you attribute that growth to?
Well, I think a very important thing, and we actually discussed it yesterday at our board meeting, is that big thing on focus, the ability to say no, because it's quite easy to say yes to everything. I want to do everything, but what is the real client needs? And to really focus on 2-3 things that really makes a difference, and then execution. Because when you talk strategy, it's easy to talk strategy, but it's the execution part. How do you deliver, and what is the client really experiencing? Yeah, it's the ability to execute, and I think what is very important is to measure it. It's like what I said is everyone says service is important, but what is service? In our case, we've defined it as side-by-side consulting. So our consultant and our client looks at the same screen and sees what has been entered. We're measuring every single screen, so we can understand when a consultant is standing still for a long period at a particular screen. You know, it's that detail of execution that we focus on.
Was there any tipping point a couple of years ago or a specific incident where the ground shifted for you in your business?
Yeah, I think probably when the brand was established, when people were stopped saying Capitec Guru, and where the brand was taking, has been accepted in the market. We always said it's going to take 10 to 15 years. And I think it was probably about 12, 13 years where it actually changed, where people were not saying Capitec Guru, but was accepting the brand and that we're a fully fledged bank and we're not a microlender anymore.
There's been some talk that you're moving beyond being a bank to a fintech company. Do you think that's a fair assessment?
No, we don't see it as a fintech company. We see it as a financial services company. You'll see our branding. We've taken actually bank away. The Reserve Bank, we need to say bank. But it's actually offering the financial services to our clients, making sure that our clients understand the end-to-end financial well-being. That is the why in our lives.
And then your shift towards the higher end of the market, do you think that's going to help you scale up much more? And what was the reason for that shift?
Yeah, I think it's a misperception in the market. It's like when we started and we defined our business plan in the early 2000s, we said we want to bank 96, 97% of all South Africans. It's just that top end that really is looking for very specialized services that we won't bank. We leave that to your specialized banking services. And it was just a strategy. We started off first in the rural areas and then went into the urban areas. And we started at the lower income and moved up into the higher income. So from day one, the plan was to bank all South Africans.
Can you just elaborate a bit on your strategy in terms of your home loans and how you've got the loans in your books and the relationship with SA Home Loans?
A very good example of a partnership whereby for us it's not a priority in the short and medium term to offer home loans because we're focusing on optimize the 15.7 million clients as well as build business bank. We believe there's bigger opportunities there. But we sit with a situation where, let's say, a client is 25 or 30 years old. He's banking with ourselves and he wants to buy a house. And the moment he goes to any one of the other 4 traditional banks, they will lure him in and say, you must move your bank account. In our case, we've got that partnership with SA Home Loans, and they offer him the banking product. The nice thing of that is it's not on our balance sheet, so we haven't got the risk. We earn a very small fee on it. And it's, for us, it's a priority thing. We're quite relaxed with it. We're happy with our relationship. We've got a very strong relationship with SA Home Loans. And our focus now is actually on building the business bank.
Banks have been criticised for not handing out loans to businesses. Are you going to be able to do anything to free up the funds more for your clients?
Your problem is not that there's a lot of, if you look at the loan scheme that was developed by the SARB to help small businesses, I think it was just too late because at that stage, if I look at ourselves, we've already committed about 12 billion. If I look at the total commitment of the banks, it was probably over 200 billion. And that was done in June. The guarantee scheme only came in place September, October. And what we're definitely seeing is that people are scared to take on more debt, and they have rather cut back in operating expenses to manage their businesses. I think if you're in a growing economy and everything is going well, then people say, I'm prepared to take the risk of taking on a loan. But if you're uncertain, you say, I want to limit my credit and I want to make certain that I'm in a healthy situation. And I think that is what is happening in South Africa, is people are careful at this stage of the fight.
So how are you going to grow that business? You brought Mercantile in. Are you looking at other acquisitions?
No, we've got no. I've always said that we're not an acquisition company. We believe in growing. So for us, is we've bought it. We want to change the service model completely and make it completely different. We want to be able to scale it. So we're building that. And once we're happy with that, then we will rebrand it to Capitec Business Bank, which will be probably middle of next year. But we're quite happy with the acquisition. Like I said, there's plenty of opportunities on the business banking side, and then to optimize our nearly 16 million clients currently.
So what are you going to do to eat into the market share of the other business banks?
Well, I think wait and see. That's what we're building currently. That's the whole purpose.
Are you going to be looking at other innovations with tech like you have with the retail market?
For sure. I think if you look at business banking, the traditional service model, I believe, is flawed. I think COVID has also helped it. So pity COVID has actually happened, because our challenge from the day we bought it, I've challenged the fact that why must a business manager drive out to a business owner? Let's take, I'm sitting in Stellenbosch, I must drive to Paul for 30, 40 minutes. I'm unproductive, and then see you and then come back. There's much better technologies and solutions that you can offer to clients. So we're looking at building a digital business bank, which will be different.
You also mentioned in your presentation that you don't want the effects of COVID-19 to linger. How are you actually going to do that?
Well, you can't put COVID-19 behind you. I think for me, it's more about on the people side, to spend quality time with our people, making certain they understand the why. Because if people understand the why, I believe they deliver. And we need to find that balance between working from home and working at the office. To work at home on a specific task, that can be done. But the moment you strategize, the moment you brainstorm, the moment you create culture, the moment you bring in a new person, you need to have that personal contact. Humans want that contact, and you're so much more effective. And those are the type of things that we're working on, because we believe we need to be innovative, we need to be creative. And to do that, you need to have your people with you.
That was Capitec CEO Gerrie Fourie speaking to me, Jackie Cameron of BizNews.
And you can hear the full interview on BizNews Radio, and that you can get to by going to biznewsradio.com. Got all our podcasts there, as well as the live stream as well. It's an interesting point, Stephen, on this, when he says that there is a structural problem within business banking. You were talking last week about a structural problem within investment banking. Do you think Capitec, given its disruption that it's done on the retail market, is going to get it right in disrupting business banking, given that it is there's a lot of fixing to be done for the sector?
Yes, I think so. And I think, Capitec, if you look at, what they were able to achieve, going back, let's say 20 years, people thought it's just too hard to move your bank account. There's too much friction. It's too hard to change everything. So the banks weren't going to get disrupted. Because even if we go back to 1999, there was a lot of kind of technology. It was the early green shoots of, technology, and mobile banking still came around. And the banks were complacent. And you'll know the history of the Capitec, which is fascinating because it's the ex-Boerland Bank people who, they ran a very good small bank, learned a lot, and then got the opportunity of having a second bite from scratch. And I think that's a big thing, is that when you don't have the legacy core systems and banking systems and the mergers, and you start fresh, and they really simplified banking. The whole model of, one product, simple for customers to understand, simple for your employees to understand, and simple from an infrastructure perspective. And I think there's no doubt that they know what to do. They have that mentality. They have that track record, and just the way that they talk about their business and they monitor the business, you can just see that it's a much simpler business. So I think when you get really smart people with a much simpler business, you're going to get much better results, and with no legacy. So, I think they've got an excellent opportunity ahead of them.
And here's the thing. The financial results out today were accompanied by a release of the annual report. So they've already got audited financial statements. And often what happens with big organizations like this is that they'll put out their financial results about this time, 6 weeks or so after the year end, and then a couple more months before the annual report finally is released. Here it is. I had a look at the annual report, though, because I was quite keen to see whether there was any mention of Easy Equities, which Easy Equities are very excited about the partnership with Capitec. Not a word, but maybe we'll find it in the next annual report when they add hundreds of thousands of more clients there.
And Ellie, can I ask you, who wrote the annual report? Does it sound authentic? Does it sound like it's coming from management, or does it sound like it's outsourced to a PR agency? Because that also tells one a lot about a business, I think.
I haven't had a chance to read it properly, but I think you're going to find that it's exactly, and that is such an important point that you made there. When you were looking as an analyst back in the day at annual reports, how did you know that, say, Brian Joffe wrote his own CEO report for Bidvest, and whereas maybe Barlow's, you could see it quite quickly that there was a PR company involved? What are the telltale signs?
Well, I always used to start kind of with let's say the senior management, the CEO, and roughly I would segment them into two. You got some CEOs who would give you the textbook answer, and then you got other CEOs that were independent thinkers, and it was always a fresh perspective. And often, that would tell you down below who actually wrote the report, and you can tell quite quickly if you know the business. But I think what's probably more fascinating about annual reports is to go back 5 years and see what they said, and how consistent they've been, because everyone's, optimistic and probably too optimistic, and they tend to gloss over, the mistakes that they've made, or the strategies that haven't gone wrong, or how many one-offs are in their accounts. I think I mentioned the other day with investment banking, they seem to have one-offs, every year for 20 years. So it's not a one-off. So I think with financial statements, it's really interesting to go back, do a bit of history, and say, well, what did you say 5 years ago, and how consistent have you been with that?
A chairman of the company is Santi Puerta, who was a colleague of mine, going back more years than I think either of us want to talk about. But you could see even there, when she was in her early 30s, she was very special, and came back to South Africa from Unilever, where she had quite a glittering career, and then went into ABSA at the bank, and has done a lot of other things. But it's interesting to see that they've managed to nab somebody as competent as her to run or to be the chair, or to run the board. And I guess that also tells you about this organization.
No, without a doubt. I mean, do you have kind of, figureheads for the sake of having a figurehead, almost an ambassadorial role that's going to maybe impress others? Or do you have someone that can provide genuine insights into, the business? And as you say, someone like Santi that's, been in banking, and also, made it globally. It's wonderful to have someone like that.
And a great marketer as well. And we're seeing that in a lot of their interesting strategy in partnerships. He mentioned in the interview with Jackie that they're not going to have home loans on their own book. They do that with SA Home Loans, but they just want to protect their clients from going off to another bank just for the sake of having a mortgage.
Yeah, and I think, what's really interesting is that they don't do everything. So their product offering is still quite narrow. And as Gerrie said, there's always that temptation to, jump on the next bandwagon or to try too many things. And really what they're doing is focusing on those things that work, where they think they have a core competence into their almost 6 million customers, and then finding great partners to work with, not trying to own everything themselves and manage a complex business. And just, Alec, I had a quick look at the results, and just what was quite interesting is that, bottom line, they made about 4.5 billion after tax, which we know is lower because of COVID. But of that 4.5 billion, they made 1 billion in credit life, and they made 650 million in funeral. So they're making over 1/3 of their profits in kind of not traditional, banking areas, but because they've got that rich customer base and great partners and a strong affinity with customers, they're actually able to make money. You'll know that, banking, they kind of say you make on deposits, you make a margin on your deposits, and then you make it on your spread, on your lending side, but they're not, they're making it far, far broader.
Interesting story for Capitec, and a company whose dividend today was 16 Rand a share. It's only down very slightly on last year's 17 Rand 50. And we're going to be talking more about Capitec for years to come, the way that the company has performed. Someone else who breaks the mold is Magda Wezicka. And Magda, the founder of Signia, who's decided to step down from that company, was right in the thick of things when the state capturers were at their zenith. She had a pretty rough ride around 2016 and 2017, but recent reports have told us that the South African police services are now going for the guy who made all of that happen, David Mclaughlin, the then Minister of State Security, and now, would you believe, still in the cabinet as the Deputy Minister of Housing, or they've got another name for it, settlements or something along those lines. Anyway, but I spoke to Magda today, the full interview, which also gets her take on vaccines and the fact that she believes South Africa pretty much has herd immunity. It's a really, really good interview. It's on BizNews Radio to go and listen to the whole thing. But we pulled this clip out of her experiences of being abused by the state apparatus. Let's have a listen. Magda Wezicka joins us now. Magda, you hit the news again, this time, though, to do with something with a fellow called David Mclaughlin, who is a member of Ramaphosa's cabinet still, which I was quite surprised about, given all the allegations against him. Over the years, and particularly going back 3-4 years ago, I do recall on numerous occasions you saying that, sorry about my line, it crackles because I've got people listening in. I thought you were joking.
Not at all. Not at all. So obviously, when I became a critic of Jacob Zuma, and I to date struggle and will never call him president, Jacob Zuma. So when I became a very active critic of what was happening, and not only of Jacob Zuma, but also of the corruption that was happening in South Africa. And, then, as I always said, the corruption in South Africa was actually driven by global giant multinational companies like McKinsey, like SAP, like Bain, which paid bribes.
KPMG,
then,
don't forget them.
KPMG, whom I fired, first to fire as auditors. No one wants to accept audit appointments as a consequence, because we are an activist client. So KPMG, and obviously much more of my knowledge came from Gupta Leaks and my awareness of Gupta Leaks. I became a target for, and I wasn't alone. So let me just be clear, I wasn't alone in this. I became a target for state surveillance. So, you know, those were quite stressful times because I had to get bodyguards for myself, you know, and everywhere I went with bodyguards. My children, till they went to study in the US, had bodyguards at all times. I was followed, and on many occasions you could see them following us. You know, I remember one incident when my bodyguards kind of became aware of us being followed from the Cape Town airport back to town, and you know, driving back to Signa's offices. And so in order to determine whether we were being followed, they started driving incredibly quickly, kind of zigzagging between cars, and there was a car that followed us which zigzagged between you know, the other vehicles, and I was sitting in the back a little bit petrified. I have to say that the cell phone tapping was hilarious because you could hear the click every single time I made a phone call or a phone call came through. There was a click on the line, and then the line would start crackling, so you knew that they were listening. I didn't know that, you know, that they were triangulating our movements using cell phones. And then the you know, most annoying thing was, you know, I do travel internationally a lot, and that was going through customs at Cape Town Airport because there were two ladies who were clearly not customs. They were state security, and they were there to harass me. So every single time they would know that I would fly into Cape Town Airport, I would be stopped. And they obviously had orders to keep me for an hour because they kept looking at their watches.
Interesting part of all of this is that now the South African police are investigating David Mclaughlin. That's all over the media now. It's pretty common knowledge. And the allegation is that he was running a parallel spy ring. Now, if you're being harassed when you come back from traveling abroad by operatives who were put into Cape Town International Airport, doesn't sound like a parallel spy ring to me. It sounds very much like it was part of his whole department.
I don't think it was parallel. I think it was ingrained. That's what they were used for by the previous administration. I don't believe. Look, I think there were certain people who were nominated to do this, to harass activists, not only activists. You know, I'm also aware, and I'm not, you know, going to use names, but, you know, various politicians who were in the ANC, who were, you know, I always talk about the good ANC and the bad ANC. So there is a good ANC. So other people were equally harassed and put under state surveillance. It wasn't just, you know, the private sector figures involved in the fight against Zuma. But I think that's how state security was used. It was like, you know, your own army in a democratic state.
You have said on social media you're happy to provide evidence. Have you got anything hard that you can give in this case?
I can definitely present myself and the bodyguards who were part of my self-protection, you know, my protection team, and we can testify to the fact that we were followed. I mean, I knew, you know, I saw the guys following us. Obviously, I was involved in that motor car incident where it was very clear that a car was at a very high speed following a vehicle. So it's not just my words, you know, there were other witnesses involved. You know, the crackling of the tapping of the phone. I mean, you know, my husband said to me, well, the two ladies that always harassed you at Cape Town Airport, why didn't you take their names or their photographs? I just kind of thought, well, you know, I didn't know whether I wasn't going to be arrested if I tried. But I don't think that, you know, that kind of evidence is really necessary because, you know, people within the state security sector are coming forward testifying that they were entrusted with doing this. So it's not an issue of even me, you know, bearing witness to what happened. It's people within state security who are, you know, turning against the old regime and are testifying to the fact that they did it.
What a story, Stephen Nathan. I mean, what a story.
Unbelievable. Brave woman, brave, courageous, and it's amazing that she still sounds so cheerful. You know, well done to her for enduring that and staying the course, you know, and raising her hand so early.
Yeah, she did. And many people forget that. at the time that Magda was speaking out, and also in the interview, she says she was surprised that other people in business didn't speak out as well. Well, that made her more of a target, and she came in for the harassment that we heard about. But the good news is that's in the past. We've got a different country today. My word, aren't we lucky that December 2017, the votes went the way they did? Can you just imagine what would be going on? And one thing would be going on, we certainly wouldn't have a Baldwin Properties that would be looking as an exciting prospect, because, Justin, with property, it's all about long term, isn't it?
Exactly, Alec. And I mean, Baldwin have put up the beautiful Wedgwood apartment facility, which is right here. I mean, we could throw eggs at the building if we really wanted to.
And one of our colleagues, Lindiwe, has bought her first property, and it's a Baldwin property. The chief executive, Steve Brooks, is with us. And we also have Rupert Finnemore, who's from Easy Equities. We've been talking a lot to the Easy Equities guys. Rupert, we'll pick up with you in just a moment. But Steve, where did it all begin? Because when I have a look back at the share price of Baldwin, you guys are around about a half of the level that you were some time ago, and yet you're a hot stock of the moment.
Yeah, thank you very much, panelists. Alec, thank you very much for having me. Look, we started this business 26 years ago from humble beginnings in the south of Joburg, culminating in a listing. Yeah, the small caps have taken a massive hammering in the last couple of years, but we're on a good recovery. Now, share price went down to about $2, which was very, very tragic. And now it's recovering well, and we're looking forward to a great future. And if we continue having great clients like Lindiwe, we're very happy, and we keep forward.
Where in the south did you start?
We started in the south in Robertsham, in a development called Ivory Court. 50 apartments was our humble beginnings. So we started with that, sold it out on one Sunday afternoon, and we progressed from there. And now we're nationwide, which I'm exceptionally proud of our company.
Steve, you need to swap notes with Robbie Brosen. Do you know the Nando's, which is now global, also started in the south of Johannesburg in Rosettenville, though, next door to Robertsham. So humble beginnings don't mean that you're going to have a humble ending. But where you are at the moment, Piet Viljoen, a highly respected asset manager, and he was at our investment conference. He said Baldwin Properties was a great stock, great value stock. He suggested that it was one of his that he would put in his bundle of undervalued opportunities. We then had Johnny Rabi from the Rabi Property Group in Cape Town said he wouldn't touch it with a proverbial barge pole. It seems like not everybody's a fan.
Oh, thanks, John Rabi. I mean, that's maybe we should discuss how we wouldn't touch him with a barge pole. I mean, really.
No, he meant your shares. Yeah. He didn't mean the company. He meant the shares were just, he didn't see value in them. That was it. I apologize if I sent you the wrong message there, Steve.
Yeah, but Pitfall, you and I agree with you. The shares are undervalued. We're trading at quite a strong discount to NAV. You know, we're nationwide. We're in the right sector. You know, our apartments are good quality. Our lifestyle centers are exceptional. We're about to start construction on our Wedgwood development in Sandton, and that's changing the landscape in the market. So we believe we're a good thing. We've been around for 26 years. So, you know, we really believe that it's a great share to buy.
Rupert Finnemore is with Easy Properties. Rupert, how are you guys related to Baldwin Properties, and why them?
Well, thanks for having me on, first of all, Alec. Well, why Baldwin? We've through some of our shareholders, there's a long relationship with Steve and his company. When we launched, we were obviously looking for really good stock to launch our fractional investment platform with. And we managed to get a couple of really good deals from Steve to be able to offer those back into our investor community. And the kind of relationship's gone from there. I mean, Easy Properties launched just shy of a year ago. And it's interesting to hear Steve talk about those 50 units that he started with in the South. I was having a look at the units that we've invested in through our community of the Baldwin units. And with this next IPO that we're going to do, it's going to take us up to about almost close on 50 units of the Baldwin units. So maybe there's a turning of history or a circle there to look at in the future.
So just explain that. You offer Easy Equities clients in the same way as Justin and I can go buy 100 Rands worth of Amazon shares instead of having to pay 60,000 Rand to get one share. You also offer a share in a Baldwin apartment.
Yes, we do. I mean, it's not only Baldwin, though we've obviously done quite a few transactions with Baldwin. So what we go and do is we go and find really good property deals. We we raise capital to purchase those properties through an IPO and allow guys to invest, people who've wanted to invest in property and haven't had the opportunities due to a number of the friction points that exist. We've kind of overcome a lot of those friction points and give access to guys to invest in really good property investments, either at a good discount or high yield for as little as R1. So as an example, with one of the Baldwin developments that we invested in, we bought 10 units out of the Blyde, which is out in Pretoria. It's a staggering thing. And I mean, Steve talks about those entertainment and lifestyle centers. They're mind-blowing what they actually offer in terms of the kind of average purchase price. But we bought 10 units there, and I think we had north of 7,500 people invest in those particular 10 units. So it's really providing wonderful access to people who didn't have opportunities to necessarily invest in property before.
Rupert, if I'm looking for property exposure, why would I go through Easy Properties rather than a pure play, say through Growth Point or Redefine? I mean, they're operating at big discounts and you're getting good yields there too.
Yeah, I think it's a very different play altogether. So so far, our offerings are only residential, though we are going to be offering different segments of the property market to invest in. But, we're not a listed property fund. We're not a REIT. We're not any of those things, and we're not trying to replicate that either. What we are actually doing is through a crowdsourcing opportunity, giving people the opportunity to just invest in traditional residential real estate, which obviously has an enormous political and psychological history in this country, for one thing. So people actually want to invest in basic residential units. I think, if one considers some of the complexity around these big managed funds, it's very difficult to actually see through these management structures and look at what these individual properties are and what the investment opportunities are. And you're kind of theoretically buying and trading shares, actually. This way around is actually just much more of an investment in the physical property. Each one of these IPOs is a separate shelf company, and you get opportunities to invest in individual properties of your choice. Maybe you want to invest in two and skip one, and you really like the look of another. So you can kind of diversify through these residential units that you may or may not like, rather than just putting your money into a managed fund where obviously you get very little say in what happens and what gets purchased and whatnot. So there are quite a lot of fundamental differences.
Stephen, from your perspective, it's interesting that you are bringing property ownership further down the scale. In other words, to the mass of South Africans. Now, if you can get that right in this country, if you can serve the bottom of the pyramid, or not necessarily the absolute bottom of the pyramid, but somewhere in the pyramid, rather than where many people are focusing just at that very, very rarefied top end, you can have a fantastic business. And we've seen that with Capitec. We've seen it with ShopRite, for instance. Is that where your focus is? Is that your why, as Kerry Fourie was saying a little earlier in the program? Steve Brooks?
Yeah, sorry. Look, I think what Easy Equities are doing is fantastic. The legacy of this country, the history, to allow previously disadvantaged peoples to buy shares in a Baldwin apartment or any of the other apartments is unbelievable. I think we've just done a deal with you guys on Polo Fields, on a bit of stock in Polo Fields. Yeah. The Blyde was fantastic. I mean, Alec, I'd love to get you out there and go for a swim at the Crystal Lagoon there. I think you'd be absolutely amazed at what you see out there. So yeah, I think there's a great future. We've launched 2 or 3 years ago our new green brand, which is to cater for people that want houses below $1 million, and that market is absolutely taken off. and it's a real large sector of the market. And I think with easy equities, I think we're going to have a long relationship. I'd like to obviously see more than 50 apartments. It's very nice that you acknowledge that our start was 50. Maybe we challenge you guys to get to 500. That would be I think there was a Gunston 500 surfing competition at one stage. Maybe we can get from 50 to 500.
And Justin's shaking. Yeah, Justin shaking his head. He says, "What's this Gunston 500?" He probably hasn't heard of Sean Thompson either. But Stephen Nathan, I'm sure you itching to have a question.
Well, maybe just a comment first. I mean, I think it's fantastic, this fractional ownership and, bringing more people into the savings net, because South Africa, we have a spending problem and we have a debt problem. So we're kind of crowding out the lower income. And often it's the lower income who get the worst deal in financial services, because if you look at the furniture retailers and the unsecured lending, they end up paying 3 or 4 times more than anyone else. And also it's the wrong, they're doing the wrong things with money. We don't have a savings culture. And these initiatives, Easy Equity, Easy Properties, creating that savings culture and hopefully people seeing the benefits of growth in their savings is absolutely fantastic. I do have a question for Rupert, is just to ask you, how do you price this? Because one of the things in the stock market is that, you've got fair pricing, transparent pricing, and reasonable liquidity. So how do you price these, your fractional properties, and how often do they trade, and what is what does that look like?
Yeah, so the timing of that question is actually really good, because we've just launched an auction capability on our platform literally yesterday. That's obviously to deal with one of the major liquidity issues around investing in property. We obviously encourage people not to invest with money that they're going to need for school fees or rent down the line. We're encouraging the full investment period, 5 to 7 years. But things happen and people need liquidity, and traditionally it's really difficult to get that liquidity. So we've created an auction platform, just like at the auction periods on the JSE, people placing bids and offers, and obviously there's a fair market related price that will come out of that. But when we actually go and raise the original capital, I mean, it's very simple. We go out and make an offer on these properties. We go and get independent valuations done, which will obviously show the discount to purchase. And we basically issue shares in each one of these SPVs relative to what that purchase price is at a par value of R1 per share. And then obviously we use that cash to raise that money. The auctions is another option, and we still will remain to see where these levels are going to settle. But interestingly enough, what we do is we give an indicative value of the shares based on a net asset value and a discount value on the purchase. And so what has been lacquer to see is that the bids and offers that have been placed in the last day are all very much kind of aligned with what that share price is based on the new valuation of these properties. But that's essentially how the share price kind of plays out.
It's so nice to see these innovative new concepts. Before we close off the program tonight, though, Steve, can you just give us, Steve Brooks this is, can you just give us some visibility on your pipeline? How many new projects does Baldwin have in the planning stage?
We have 18 projects that are live at the moment, and we have an absolutely huge pipeline of over 60,000 apartments. So it's one of the biggest pipelines in the country, which we're very proud of. Strategically placed, it's very simple. We've got 4 brands. Our green brand, under $1 million. Our classic brand, which is what Baldwin was built on, which is the typical 4-story apartments. The signature brand, which is slightly more upmarket. And our lifestyle brand, which is the high-rise, as in Wedgwood in Sandton. And we operate in the Gauteng province, which is, in the old-fashioned words, Pretoria and Johannesburg, or Tshwane and Egoli. And then up the north coast, Ballito, Umhlanga Node, and then in the Western Cape. So there's 3 predominant areas we develop in, and we've got 4 different brands. So that is the simplicity of it. And we do approximately 4,000 apartments a year.
Steve Brooks, the Chief Executive of Baldwin Properties. We also heard from Rupert Finnemore, the CEO of Easy Properties, which is part of Easy Equities, making accessible investments into the residential sector. Our guest co-host tonight was Stephen Nathan, who is an independent now, the founder of 10X, which he left a little while ago. And it's always good to have Stephen with us on a Tuesday night. Before we go, here's my colleague Justin Rowe Roberts with an update on the markets.
The JSE All Share Index was up at 67,100. MTN increased 4 Rand to 94 Rand a share on the back of news that CEO Rolf Maputa bought over 5 million Rands worth of the company shares. Sasol increased 6.5% to 225 Rand a share on the back of stronger Brent crude prices. Naspers increased 100 Rand to a touch over 3,500 Rand a share. And Cartrack fell again, this time by 7% to 48 Rand 50. The share is now down almost 50% from its highs a few months ago. In the currency markets, the Rand was flat against all the major currencies to 14 Rand 56 cents to the dollar, 20 Rand to the sterling, and 17 Rand 36 cents to the euro. Gold is flat at $1,742 an ounce. Brent crude is up at $64 a barrel. Premier cryptocurrency will put you back 920,000 Rand a Bitcoin. And surprise, surprise, the S&P 500 has hit a new record high.
And the other market numbers to come out of the US today, the Dow is down 0.5% and the NASDAQ is up 0.57%. So another good day for the NASDAQ and the S&P being pulled higher by tech shares. It's been good to be with you on the BizNews Power Hour this evening. We'll be back again tomorrow at 5:30 on Fine Music Radio in Cape Town and live streamed around the world, as we've just heard earlier from the West Ham United supporter who's in Berlin. You can get us anywhere by going on to biznewsradio.com. From our team, till the next time, cheerio. You've been listening to the Power Hour, brought to you by the team at BizNews.
Alec,
Eben, thank you, man. That was really good.
No, great pleasure. Just to say that if you haven't seen Crystal Lagoon at the Blythe, have you ever seen that?
I haven't. Have you?
I've been there.
Just whereabouts is it?
Just Google it. No, the Blythe, I think it's in Centurion somewhere. But I know them because they were actually clients of ours at 10X. Have a look at it. It's phenomenal technology. It's a lake. It's a man-made lake.
Yeah, a man-made beach
is
what we call it.
Oh, you say that?
I've been there.
It's unbelievable. They use it's Chilean technology where they monitor the kind of pH levels in the water from Chile. But just have a look at it. It really is quite an exceptional place.
Yeah, it's beautiful. Anyway. It's beautiful also for
really
for canoeing. My first experience to canoe. You know, you can't just go into a river that's having a little bit of waves and stuff. It was
Who knows what's in the water?
Exactly. I'm not trying to die.
How big is it? How big is the lake?
I'm not sure how to put it, but it's quite big. It's nice.
But you could go and canoe while other people were swimming.
Yep.
Just have a look at it, Alec. It's quite it's quite amazing because I was actually going to ask Steve. It's an enormous attraction. Obviously, I don't know the cost benefit because it's quite expensive. So you need a certain scale to get it. But it's unbelievable. It really is. It's just worth having a look at.
They do.
So you can kind of get Mauritius in Centurion.
But they're doing interesting stuff, very innovative things at Baldwin. And it's really nice to see them working with Easy, who are also doing incredibly innovative stuff. So how the world's changing, eh?
That's all good, all good. And they're focused on the right end, at the lower end, at least getting home ownership, interest rates falling makes it more affordable. So it's a wonderful story. Home ownership so important for for people being committed and good citizens.
And a much broader and expanding market in South Africa than other segments, that's for sure. Stephen, good, man. Thank you.
Thank you. Thanks, everybody.
We'll see you next week. Okay, man.
Yes, thanks so much. All right. Take care.
Cheers.
Thanks. Bye-bye.
Bye then. Bye.
Awesome show.